What's up, everybody? Monday morning. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to take a look at the markets from an educational perspective for breakdowns, reversals, all that fun jazz. If you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts and the updates. Leave a like, leave a comment. It really is appreciated. All right, let's go ahead and dive in. Not a whole lot to talk about today, to be quite frank. And the reason is because the markets are in a little bit of a stall pattern on the news that Russia and Ukraine are going to meet. That they did agree to meet, but we gapped down last night and gapped down really on the open, but never got below the first candle's low, and have really been filling that gap the whole evening. Now, I will say that if you look at this on a 4-hour chart, technically we have a higher swing high and higher swing low, and we've got now two higher swing lows here, or three higher swing lows: swing low, swing low, swing low. And so you're really, it's okay to be a buyer. The problem is that there's not really a lot of great places to buy. We were looking last night and said, hey, you might get a little opportunity right here on this little area of demand, but the market just sliced right through that. But then steadily all night has just rallied up in the Globex sessions. But when I look below me, none of these are quality areas of demand to make me super interested in buying on a pullback. And so I just don't really see great levels today for me to jump in. That's the S&P. The Nasdaq looks very similar. Although the Nasdaq did give me a slightly better level right through here. Right through here. Slightly better level. But the downside of this is this upper wick right here means that we rallied up, dropped back, and then rallied up again. It's almost a bit of a, call it a retest of itself. So, but if you're dying to take a trade today, which you should never be dying to take a trade, this one might be the way the way to go. Now, I think that we still could very easily fill the gap that was set up. We see that the Russell has actually not gotten above its first candle's high and still has a gap to fill. The Dow is actually sitting below where I think, as far as a breakout goes, the Dow is probably the best one for a breakout to play into this gap fill area. The Dow is actually, because you're basing here in front of the level, so the Dow's probably the best one this morning. But other than that, there's not a whole lot. And one of the things that I say is discretion's the better part of valor, and sometimes it's okay not to trade. Now, at the gap fill area, you do have this 43.61 by 43.84. Technically, because we are on this small time frame, we're in an upward trend. You want that to be a confirmation entry. Now, on the bigger picture, the much larger picture, our daily chart, we're still in a downward trend. Our weekly chart, we are in a downward trend. And so that hasn't changed, but the 4-hour has. And so that's the first signal, right? Not saying that we're going to, come shooting and rallying back up. My gut actually tells me that I think the better probability is that we will continue to head down in the longer term. But I'm going to trade the chart that's in front of me. And the small time frame chart is giving me that opportunity to be a buyer. Next, energies and metals, looking at crude oil. So crude oil and gold, you're seeing a very similar picture. Like I said, don't have a whole heck of a lot to talk about today. As we are in crude oil, still sitting inside that first candle's zone, as we popped up on the open and then immediately traded down. But now it's just been chopping along sideways. You've got your gap fill area down in here. Theoretically, you could take a breakdown below here if we get basing. So that would probably be your best trade is a breakdown below there, provided that we get some basing. Looking at gold, similar thing. You've got a breakdown below 1884. You've got a really nice supply up here. We're just pretty far from that area. And so I think that if gold continues to head down, a breakdown below here might be a pretty good way to go. You could get a little reversal off where we are right now, but in reality, there's not a whole lot there. Natural gas is also between some major levels. so there was really not a whole lot to look at. Now, I will say that in the currency markets, we did look and say, hey, there could be some shorts. Well, in the overnight, we reversed, and so we had a really decent level of supply here in the euro, but the market popped right up through that zone. Now, I will say I'm not awake to sit in front of these markets, so I don't do set it and forget it style trades, and there was no strong entry before laying down. So the fact that we popped through there is really okay. And so you're coming back up a little bit, but once again, no strong areas for entry. Looking at the New Zealand dollar, I was looking in the New Zealand dollar at a potential breakdown on a gap and go situation, and unfortunately, we broke below and then popped right back up to fill the gap. So in reality, there's just not a whole lot. Today's one of those days where there's just not a lot out there for us to jump into the markets, and I think that today is a good day to allow the market to set up and see if we can set some higher highs in the equity markets. Um, because that would really be important, and then potentially even changing that direction. But until we see a definitive move one way or the other, today's a good day to play some golf. Work on maybe work on your trade plan. Read a few books. Whatever it is that you like to do, today might be a good day to do it. I don't feel like it behooves most people to be forcing trades, and I know that's not what you tune in for, right? You tune in so you can say, hey, what are some good levels that Chuck can show me today? Well, I don't have any. And the reason is because I don't want to force trades in a market that's between major levels. You can have a lot of volatility, but still a lot of crap in between. And that's kind of where we are today. So I'm going to hold off on a lot of these positions today. We'll certainly still have some levels to look at for tomorrow. And if something pops up during the middle of the day, I will certainly put some updates out there in the trade worksheet today. I'm going to keep an eye on the trade worksheet today and the Discord app. So if you have any questions, send us an email, support@tradersarmy.com. Till tomorrow, everybody. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.